basically, it's like they're playing a game of tug of war. Tug of war? Tug of war? That's not right. Do you like to have a system that helps you make the right decisions before you take a trade, no matter if you're investing in Forex, crypto, options, or whatever? Well, stay tuned because in this video, we're going to talk about candlesticks and how you can use these in order to help you find high probability trades. This is important, especially as a new investor or day trader. Being able to read these prices accurately with these candlesticks is really going to help you. And then make sure that you stay around until the end because I'll also go over a few examples and then also how reading candlesticks combined with price action can help you find those high probability trades of profitability. So stay tuned. If you're new to this channel, go ahead and hit the subscribe button so that way you can get more content like this. And if you don't know who I am, my name is Lakeisha Tomlin. I am a former engineering manager turned full-time day trader, and I help new day traders make their first profitable trade in 60 days or less. So before we jump into the examples, I want to talk about some of the benefits of reading candlesticks. And basically, reading a candlestick gives you a lot more data. It gives you the open, the close, the high, and the low price. And this may sound like nothing at this moment, but stay into the end because we are definitely going to go over some examples. But basically, it gives you a lot of data. It gives you insights as to whether or not the price may be going up or the price may be going down or the price may be going nowhere, which is also known as consolidation. Also, looking at the charts give you a great visual representation of what is happening. So you may be familiar with the term the bulls and the bears. Basically, the bulls want the price to go up and the bears want the price to go down. And looking at the candlestick will give you a better understanding of what is happening with the price. And essentially, with the candlesticks, you'll see the fight between the bulls and the bears. Basically, it's like they're playing a game of tug of war. And you'll see the price go up, down, and eventually it'll land on something. Understanding what is happening in the market with the candlesticks will help you make better decisions on whether or not you should invest or take a day trade. So with that said, there are also some cons with the candlesticks, and we're going to briefly touch over them, but for the most part, there's a lot more positives than negatives. So when it comes to looking at the candlesticks, the cons for those are basically sometimes traders will just look at the candlesticks and nothing else. There's a really important key component that a lot of traders are missing, and I know I especially was missing this when I first started day trading, and it's understanding price action. And in this video, we are going to go over a couple examples of price action and what I mean by that. So don't worry if you don't know what that means now. I'm going to show you an example. But basically, understanding price action, also known as support and resistance levels and a whole bunch of other things. But basically, when you combine your knowledge of looking at the candlesticks plus price action, then it gives you a better representation of what you'll possibly see in the future when it comes to the price on that particular market. And if you're not familiar, a market is just basically a company that you're looking at or an index. So say for instance, if you were looking at Apple, then that is considered one market. If you are looking at Amazon, that is considered a different market because no two markets behave exactly in the same way. They all have little differences, even if they are tracking similar things. So now we're gonna go over to my computer so that way I can show you some examples of these candles and how you can use these candles with price action in order to make the right decisions when it comes to taking your day trades. The reason why we use candlesticks, like I said before, it's because it gives us a whole lot of information in terms of what is happening in the price. So another chart that you may have seen is this line chart right here. And basically, it only gives you two prices. It gives you the open price and the closed price. And that's pretty much it. Although I wouldn't totally discount the line chart, mainly because it's something that I do like to flip back and forth between when I'm looking at the candle chart, because sometimes the candle chart can have a lot of information or too much information. Sometimes I like to simplify it by going to a line chart. But if you don't know the basics of the candlestick, then let me go to a random example on Google. And basically, in this picture, what you have is four pieces of information, at least four pieces of information that a candlestick will give you. So obviously from these terms right here, we see bullish, we see bearish. Wait, let me get my drawing tools so that way we can map this out. Okay, so you see, like I said, bullish, we see bearish. So bullish refers to the price going up. That's why this candle is green. And then obviously bearish refers to the price going down. That's why this candle is red. So there are four key pieces of information that a candlestick, no matter if it's bearish or bullish, can give you. And that's what you see here, the high. So that is the highest price that that candle has reached in a given time period. So as you probably have seen, that with candlesticks, each candlestick represents a period of time. It could be 1 minute, 5 minutes, 1 hour, 1 day, 1 month, or whatever. But basically, this high shows us the highest point that it got in any period of time. And then the low shows us the lowest point in any given time, or any point in time. And then we have the close. So for a bullish candlestick, your open needs to be lower than your close. So you can see from this arrow here, that means that the price has, oops, ugly arrow, but basically the price started here. So say this is 1, and then it closed at 2. So 1 is greater than 2. So we would say that this price moved up by 1. That's a hypothetical example. With the same being true on the bearish side, we have the highest point that this candle reached. We have the lowest point that this candle reached. We have an open and a close. So notice that the open for a green is down here for a bullish candlestick, and the open for a bullish is at the top. That's because in order for the price to show bullish momentum or bullish movement, we know that the price has to go down. So that is why the open, in this case, if this was 1, this would probably be 0, hypothetically, or any number that you see on the chart. So for example, say if this open was 10, and now this is at 9, we have to know that the open price is higher than the close price. And the reason why is because this price went down. So it'll show bearish. And this is basically 4 data points that you will get from these candle charts. Another thing you may be seeing, so this thing right here is called a wick. And the wick can also give you some really good information. Now we're going to see more examples when we move to an actual chart, but basically these wicks or shadows, as you may have seen them, this gives you a lot of information as well. And then too, the length of the body, this piece right here, can also give you some really good information. So as you can see already, this candlestick has given you 1, 2, 3, 4 pieces of info right here. And then it also gives you 5, 6, 7 pieces, because we have the top wick, we have the body, and then we have the bottom wick. So it's giving you at least 7 pieces of information versus the line where it only gives you information about the open and the close. So each point on here represents each line from point to point. You can kind of see the points. They're not drawn out perfectly, but basically this gives you information about the open and the close of each segment of this line. So anyway, and just know that I am on the daily chart. So each one of these moves represents an entire day. So that's possibly 1 day right there. And then from here to here is another day. And basically I'm just drawing these lines where I see the bends. So it's not It's not really hard to see if you pull up an actual chart on your own. All right, so here is the other portion of the video where we're going to talk about a few different candles, and then we're going to talk about how we can combine our understanding of the candles with price action. All right, so let me move myself out the way. So right now we're currently on the Apple chart. We are on the 5-minute chart. So that means that each candle here represents 5 minutes. So 5 minutes, 5 minutes. So right here, this is 15 minutes of price action or price information. So basically, we talked about a few candles. So just to keep this pretty brief, as you can see with the candles, I talked about the body of the candle being very important. So basically what I like to do, you see that this candle has a high, right there. It has a low here. And then what I like to do is look at about 50% of the candle. And if the candle, in this case, since it's bullish, closes above the 50% line, it tells me that there's a strong possibility that the price may want to continue to go up. And as you can see that it did. So in this case, with this candle, it has a high here, it has a low here, and then this is about 50%, and it closed below the 50%. It tells me that there's a possibility that the price may continue to go down. As we see that doesn't always play out, and it's totally okay, because when we're looking at this, we're not just looking at one candle, we're looking at the entire picture. Because your graphs are obviously going to be a lot bigger than the just single candle. So basically, when it comes to this particular section, you can see that there are a lot of candles that are just kind of bouncing around here, not really doing much, and this is known as consolidation. So one thing that we can look for in this consolidation, sometimes the consolidation moves in a particular way. Sometimes it can move in an upward direction, sometimes it can move in a downward direction, or sometimes it could just be kind of random, just like this. So as you can see, we have this, it kind of looks like it's going up, and then down, and then up, down, up, down, up, down, up, 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 and then down. So basically, it's just all over the place. And you can get a lot of information about what may happen to the price once it breaks out of that consolidation. So when it comes to price action, basically we're just going to talk about it in terms of setting up your support and resistance lines. So you notice that I have all of these lines on my chart. Basically, these are my support and resistance lines. And if I wanted to, I could go down to a much smaller time frame and see what price is doing. So we're not going to do it right now because for some reason my trading view is not letting me do it, but let's just do it here. So if we look at this consolidation area here, then we can see that there's a clear level of support right here, and then there's a clear level of resistance here. We see that this candle broke this support. So when some price breaks out of that support level, then it tells me that, hey, there is a strong possibility that the price could continue to go down. And as we see, from when it broke out of this, it did go down. It went down here, it came up a little bit, and then it continued down. Came up a bit, and then continued down. So that is a really good sign for me to take all the information that I'm getting from the candles and look for shorts. It's basically me hoping that the price continue to go down, and as the price goes down, I can make money when the price goes down. It's pretty cool, actually. So going back to some of these candles, one thing that gave me that clue, outside of this huge body, basically we talked about briefly this being the low, this being the high, and then about 50% of the way this is closing, or this has closed underneath that 50%. So it's mostly means that there are a lot of sellers in this market. And especially because the body of this candle is pretty much almost the entire length of this particular candle. But basically, one other clue that I had was with this wick. This wick told me that there was a possibility that the price will go down. And as you're looking at this, you're probably thinking, well, this candle had a big wick, this candle had a big wick, and so did a couple of candles here, this candle here, and all these candles here. They basically had wicks. Okay, it's kind of messy, but basically you can see that there was a big wick to the upside. It means that the price is rejecting these higher levels and favoring lower levels. As you can see, these open and closed kind of much lower than their higher or highest high. So which was the top of this wick here. So it had been rejecting those higher levels pretty much all throughout this area. And then finally, one of the candles said, I had enough, and it broke down to the downside where it continued to go down. And this is typically where I like to find good entries inside of the market. So when you combine your knowledge of what the candlesticks are telling you, plus any direction in the market. So I'm kind of zoomed in quite a bit here. If we zoom out a little bit, zoom out, let's see, we were in this area. We were just recently looking at this area. We can see overall that the trend is down. So when we see that the trend is down, we know that we want to focus on shorting, or we want to find areas where we can take a sell position. So we can see that with this trend, there are a lot of sellers in the market, although there are some points where the candles push up. These are known as pullbacks, and these are temporary movements in price in the opposite direction. If the overall trend is down, the only way the price could potentially reverse is if the price breaks above highs of this downtrend. So you can see here, it broke here, and then it continued to go up, up, up. And who knows where it will go, because basically this was today. So anyway, I don't want to get too deep into this, but basically by drawing out your support and resistance levels, knowing where the price or what is happening to the price in terms of the overall big picture, and you can read these candlesticks and try to figure out where the price is going. So like I said, we're in a downtrend. We only want to be looking for shorts. And then in this consolidation, where did it break out? To the downside. And it continued to go down for a little bit longer. So basically, when you combine your understanding of reading the charts and understanding price action, and if you want to know more about how to plot out your support and resistance lines, then go ahead and check out the video recommended here, because I really go in depth in that video to teach you how to draw those things out. And if you enjoyed this video, then go ahead and give this video a like, and then also subscribe to this channel, because every like, comment, subscribe really helps grow the channel and support it. And I thank you so much for watching this to the end.